The way a consumer spends is evidence to have seasonality. The way that corporations make money from specific product lines is evidence to have seasonality. Commodities such as gold and Bitcoin are evidence to have seasonality. And therefore, seasonality for all asset classes can be evidenced in the revenues they make for a product line during different quarters. And for Apple, Amazon, Tesla, that is October through to December. Interest rate sensitive assets perform best when the Fed starts the easing cycle, which has been signaled on the CME trading platform, Polymarket, and by Fed Chair Powell himself will be in September. This is simply bullish for the medium term. Universities previously opposed to Bitcoin now direct students towards Bitcoin books. I would much rather use that money and allocate to Bitcoin on pullbacks of 10% or greater and then ascertain my time horizon. How many months or years am I going to hold this asset? As concrete research shows that no one has negative returns on this asset within a 10-year time frame. In most cases, this is a lot less. The credit cycle uptick is starting. I'm bullish on interest rate sensitive assets like Bitcoin. On-chain Bitcoin UTX addresses with 100 or more is on the increase. I am bullish on Bitcoin. Plan B's red bull market RSI dots print another red. I'm bullish on Bitcoin. And a profound insight on ExxonMobil, which was just an oil conglomerate in the past, was one of the largest companies ever by market cap by simply having oil-rich assets. This foreshadows MicroStrategy, the largest Bitcoin treasury. This could potentially be the next Exxon by simply just holding Bitcoin. I talk about salability a lot on this channel, and it's the value of money. Can it survive time, space, and scalability? Bitcoin can be divided into units into the 100th million, which again is bullish for the long term. I've experienced this with every investment I've ever made, where the building blocks and the foundation underneath the asset is growing and developing and strengthening, but the actual increase and accrual in the stock price or the share price or the commodity price isn't evidenced on the day-to-day chart. And in fact, it's usually over a long period of time, either sideways, chopping, or in a downtrend. But this does not change the fact that these assets have, after you've had time to understand them, a flourishing explosion period. This video is detailed and it will go through the overview of some data points that show short, medium, and long-term price direction, macro trends to focus on for the next 6 months, on-chain analytics for Bitcoin for the next 3 months, potential concerns in the short term, but in the long term, useful for understanding the price action of Bitcoin and why it's so volatile. Digital asset data that signals that we may not be at the top and we still have 3 to 6 months. And then interesting top signals to be mindful of. So as I go through these different data points, try and get the complete picture by watching till the end. And then if you get some value from this, like, comment, subscribe. Let's go. My aim with these videos is always to provide a fundamental understanding of Bitcoin, but short-term price action can be really useful and patterns always form again and again with Bitcoin. It creates this all-time high and then it comes back down to retest the previous all-time high. It then goes back and it cuts through the all-time high just a little bit and then it comes back down to that support line. It goes up again and then it comes back and it breaks through that support line. This leads to short-term panic. Bitcoin then reclaims that channel. Liquidity that it's searching for is always held under support, stop losses, and high leverage. And so Bitcoin's always searching to try and take out that liquidity. And now that liquidity is at the all-time high, just above. So these choppy periods are opportunities to buy, and there are opportunities to potentially take risk off the table as Bitcoin approaches the all-time high again. But you can see these patterns in different ways. And here you've got the bullish megaphone, whereas in this example, it was breaking through a parallel channel. So you can either see a parallel channel or you can see a bullish megaphone. So the short-term price action of Bitcoin will always provide opportunities to buy and sell, but it depends on the time frame. For me, it's encouraging people to understand the asset and know that over time, it's always going to be worth more, just based on the fact that it's got the scarcity element. Fundamentally, it is going to be something that will just absorb more and more of the newly printed empty money supply that's going to increase across the world. This sums it up perfectly. The subject of confirmation confidence increases with duration of time. A daily close is one level of confirmation. A 3-day close is even more significant. A weekly close is even more so. It's an arbitrary and personal choice and depends on risk tolerance to choose where one considers something confirmed. These short-term price action movements are always going to be trying to mess with as many people as possible. You've got to realize that there's no confirmation until longer periods of time have played out. So I would say focus on the 3 to 6 month window, which is always going to be for Bitcoin at this particular period of time positive as we go into the Fed easing cycle. I'll go through these charts quickly. You can find them on Glassnode. Again, they're very good for referencing where cohorts are selling and buying. The red signals that all cohorts are selling. That means that all levels of wealth are selling this asset class. Then this update shows that the sharks between 100 to 1,000 are now starting to buy again. Transfer volume momentum is starting to narrow, and this just signals that the on-chain activity is starting to slow down. But this could also speak to the change in investor class. This new buyer, this new investor is buying and holding for the long term. Treasury companies, sovereign wealth funds, they're buying, they're holding. ETF providers are buying and holding. And there's a longer term mindset behind this asset that's keeping it at a more stable and steady accrual in terms of its growth. This chart also speaks to potential concerns that the fact that the long-term realized profit is now at 3.72 million Bitcoin. The more the long-term holders that are in profit, the more temptation there is to sell. And that sell pressure takes time to absorb. And this insight from economist Willy Woo points out that the OG whales peaked their holdings in 2011, and the orange and dark orange clouds show that. They bought their Bitcoin at $10 or lower. It takes 110,000 of new capital to absorb each Bitcoin that they sell. So as those OGs have such a low cost value, their cost basis is going to take a lot more now to absorb. And therefore, it just moves the price up slowly. A quick overview of the macro, asset classes, performances during Fed easing cycles. Again, Bank of America and Merrill Lynch, they provide this really useful data that stocks, on average, during the Fed easing cycles go up by 29.3%, which means that the best opportunity outside of a recession is to be long equities and then long risk, and then Bitcoin falls into that risk on basket during these Fed easing cycles. The Fed easing cycles are being supported by the prediction markets that believe that there are going to be 2 to potentially 3 cuts this year. The ISM, which is an indication of whether the economy is expanding, has never been under 50 for this long. And when it does go above 50, it goes above 50 for a significant period of time. And that supports the expansion of equities growing, and that supports the expansion of risk assets, and that supports the expansion of everyone having more money so they feel more comfortable, more confident in spending and then also investing. This shows again the ISM still below 50. This is a good thing. This shows that we still have more growth potential to support the S&P to continue reaching new all-time highs. And then that brings up all other assets as well, all other equities. And even at this point in the cycle, the sentiment is still positive for those that want to be contrarian and bullish. The AA2 bear indicator is at unprecedented bearish levels at -22, even though the S&P 500 is at all-time highs, which means that this is the most hated rally. Most hated rallies are described by the most amount of people on the sidelines. As the stock market continues to make new all-time highs, they want to buy back in lower, but the dips are too shallow. The Conference Board US leading index never shows a top when this is in the red. These candles need to go green in order to really start to feel the euphoria that is indicative of a top in all equities and in all risk-on cycles. The Conference Board US leading index diffusion. This suggests growing economic momentum and a lower likelihood of a recession, which is positive for markets, business, and investor confidence. So you can see that as this starts to expand up, it just means that overall sentiment is starting to improve. The normalized economic expansion Z-score has not yet shown a peak, and that companies are still guiding for increased capex. Meta, Nvidia, Amazon, Microsoft, Google, even Tesla, they're all guiding for higher capex spend. That means that they're going to continue to fund and grow the AI industry, AI sector, and then the AI bull market. Now, looking at digital asset flows and how we can use this to support the fact that the bull market has probably not yet peaked. Stable coins across all different chains are continuing to grow and reach new all-time highs at 264.91 billion. The Bitcoin ETF daily inflows is a really useful indicator, and when those bars go green, it's usually when Bitcoin starts to top out. When they go red, it's usually signaling a local bottom as that selling pressure starts to get absorbed by the market. This is an extremely important data point. Which of the following cryptocurrencies do you hold? And in 2025, 82% do not hold any cryptocurrency. This is important because at an inflection point where the administrative powers are starting to regulate for cryptocurrency, digital assets, ETFs have been regulated and approved. Treasuries have been regulated and approved. And they're starting to buy and invest in this infrastructure. And you still have 82% of investors on the sidelines, which means that, again, that just does not signal a top for me in terms of understanding when a top forms. It's when most people have managed to position themselves and there's too much excitement and euphoria. A really good way to zoom out is to understand as time horizons grow, Bitcoin losses fall off. Over 10 years, no one who has invested in Bitcoin has lost money. The shorter the time horizon, the more difficult it is to play the market with all of the patterns that can form, the manipulation and leverage liquidation hunts. But when you ignore all of that and you zoom out, Bitcoin over a 10-year period has never lost money for anybody. Look at it like this: Bamboo in first 5 years, Bamboo in the next 6 weeks. That first initial investment, you leave it, and then in a short period of time, it returns more than you could ever imagine. The CeFi and DeFi lending market size by quarter was at 70 billion in 2021. I believe that the market now has expanded and should facilitate a much higher CeFi and DeFi lending. So we should be reaching a lot higher than that 70 billion. So I use that as a barometer for knowing that we still have more room to expand in this cycle. This very simple on-chain analytic data point is just looking at the business cycle, which is basically when the Fed ease, they make liquidity a lot easier for companies to borrow, and it just goes into every single area of the economy. When that credit cycle, the business cycle, starts to go into the red, that's when you have Bitcoin tops. You never have Bitcoin tops when the credit cycle, the business cycle, is showing these green bars. So you can see we're still quite far away from that ultimate long-term top. Maybe locally, if we don't get back into 112,000 on the Confluence channel, it could show a potential downtrend continuing. But over the next 3 to 6 months, this business cycle still has more room to expand. This final data point comes from Colin Talks Crypto, and he's been very accurate at being able to call Bitcoin price action in the short, medium, and in the long term. So looking at this chart, he's been able to see that the Bitcoin price on a logarithmic scale, which is the step changes are the same. So 100 to 100,000 is the same as 100,000 to 1 million. He's then also on the other side, at the bottom, he's put the market cap of Tether and he's inverted it. And then you can see that this blue parabola is just showing every time the Tether market cap hits that blue line, it's always signaled the top locally and over the medium to long term for Bitcoin. So this is something to look for. If that Tether market cap signal flashes for me, I would also factor that into so many other different indicators, from sentiment to on-chain analytics to the MVRV score, which is basically the aggregate of all the coins being traded. And if that aggregate of all the coins being traded is high, it means that a lot of people are in profit, which means that there's going to be more sell pressure in the short term. I would use this as a plethora of different data points and understand the main part of this video is understanding that Bitcoin is just simply scarcity. It's simply the ultimate form of money. It's divisible. It's able to survive time because of the immutability of the network. And it's also able to be in anywhere at all times. So it's able to penetrate the potential problem of space. So I want to finish off with how could it be relevant? I'm just going to go through some final memes to just try and summarize the main part of this, which is to fundamentally understand Bitcoin and how easy it is to get it wrong and how easy it is to get it right. You have this Harvard economist who says that Bitcoin will more likely be $100 than $100,000. This is the Ben Affleck meme when he just looks like he's completely over it. Jerome Powell, who's just tried to go in with this Volcker-style approach to the markets, to fiscal policy, to be more hawkish, to keep inflation below 2%, which is his target. And that dual mandate of jobs and inflation has now started to be something he has to pivot away from because he's just not going to reach that, as the job market has just been absolutely in a downtrend for too long. So he's now pivoting at a time when he doesn't want to. This is the classic, the Bitcoin whales, as they start to stack, are trying to shake out as many people as possible. The more you understand the asset, the more likely you are to hold it. Even if it does go down 30%, you'll see that as an opportunity to buy. And when it goes up on these parabolic moves, you can look at that as an opportunity to trim, take some profit, to put it to the side, and then to have a position that you always hold. Email won't work, 1994, the Postal Service. The internet won't work, 1999, the news. Netflix won't work, 2009, Blockbuster. Bitcoin won't work, 2025, the bank. When these new products start to disrupt, there's always going to be resistance. The Overton window from the irrational into the publicly acceptable is always a process of opportunity, and the arbitrage is in being in the middle part of that, not when it is publicly accepted and everyone has it. At the moment, we're not there. 82% of people don't have access or don't hold crypto, even though they may have access to it. Think about whether this is an asset you want to understand more. And if you do, watch this video that's basically on the fundamentals of what money is and why Bitcoin is a superior version of gold. And I hope you get some value from this video. Like, comment, subscribe. See you in the next one. Thank you very much. Bye.